Tackle today, Matt and Mark Justice, the Justice Brothers, bringing you all of the key charts, the news, the earnings reports, everything in a concise manner so that you can know what is going on in the market. Jackson Hole is tomorrow. Jay Powell speaks 30 minutes after the market opens. Matt, it is not going to be a shock if we do nothing today ahead of what is one of the larger events that we've had in some time. Talk a little bit about the technical setup and the opportunity Powell has tomorrow, and whether or not he might screw that up.
He certainly might screw that up from a messaging perspective, especially when the market is pretty much painted Powell into a corner. There's 100% probability for a rate cut coming in September. That's just a relatively few weeks from right now. There's also increasing chatter regarding whether or not that interest rate is going to be a 0.25 cut or a 0.50 cut. The market has V-shape recovered here, which basically puts a lot of emphasis on Powell coming through as well, talking about an overextended resistance test coming into that 560 level when you're looking at the spiders, which obviously, tracks the market itself. And so, yeah, I think the market is ready for Powell tomorrow, and I think the market has painted Powell into a corner, and Powell, quite frankly, Powell better come through. When the market paints the central bank into a corner, the central bank better give the market what it's anticipating, or you could see a little bit of a volatile snapback situation. And so, I think the messaging coming out of Powell tomorrow is really, really important. I think it's the number one catalyst of this week, and it'll be all the chatter until we get into NVIDIA's earnings next week.
Yeah, absolutely, absolutely. A bunch of economic data came out this morning, Matt. It was quite a little barrage of data, actually. Now, when all things are said and done, and we'll go over the specific data here in a second, this was much a wash. Market has already moved on from the data type of day. Unemployment claims came in about in line. Manufacturing PMI, the flash manufacturing, which is the first read, it's like an early read. Slight miss. The services, slight beat. Existing home sales came in line. Matt, this is the type of data day where market absorbs it. It doesn't change any narratives, and they move on to the next point. And when the next point is Powell the next day, they're going to move on very quickly. This feels like a day forgotten, doesn't it?
It certainly does, Mark. If you were slightly concerned about the labor side of the equation, especially following that massive revision from last year that came out to the market yesterday, you're still going to be concerned at 232 initial claims. Flash manufacturing versus flash services PMI numbers. So the manufacturing versus service, that's kind of been an ongoing conversation, with manufacturing sniffing that contraction territory under 50 versus services doing fairly good. And a decent data point coming out on existing home sales here today, with the slight beat on the existing home sales. But in general, yes, I don't think the data today is changing anybody's opinion. And even if it did, that opinion will be radically altered going after Powell gives his speech tomorrow. So yeah, I'm right there with you. Obviously, it's important data. I don't want to say that, but it will be also forgotten data after we get into Powell tomorrow.
Yeah, there are narrative changers. Today wasn't one of them. Powell certainly can be. And in the midst of it all, Matt, we get some stocks in the news. Zoom having quite the day. Snowflake given not as much, but man, it's been a while since I've seen a candle like that on Zoom.
Well, and it's been a while since we saw some candle with some degree of reason to talk about Zoom. Zoom hasn't been in the conversation much, quite frankly, ever since that just amazing 2000 rally when everybody was staying home and everybody was using Zoom. Well, a lot of people, those same people, still use Zoom, but it's been a trial in trying to get Zoom to monetize that and get into a growth story. Does Zoom's earnings report here today do that? Because you do have a really good technical setup that came from a reversal type scenario, a nice little W formation at the bottom, catalyst on the positive earnings breaks through that and gets above that 200-day moving average. You've also broken through some pretty decent trend lines there as well. But from an actual numbers perspective, does the numbers support maybe looking at Zoom for any secondary pattern following a pretty good, price response here today, obviously, and then coming through a little bit of a reversal coming from the low point? Well, the numbers come out with a 5% beat against expectations. So they reported right around the 139 level. Revenue came in slightly above the expectation of 1.15 billion. That would equal the 2% year over year increase in revenue. Guidance was the issue here, obviously, when you see a massive move in the market on an earnings day. Typically that's going to be a guidance update. If it's up, it's usually obviously good. If it's down, it's usually bad. That's kind of the one-to-one response in the market, is always from a guidance perspective. And Zoom increases both third quarter guidance and full year 2024 guidance on the EPS side of the equation. And so they pull off a little bit of a hat trick here. Nice beat on EPS, slight beat on the revenue side of the equation, and a good increase in guidance. Obviously justifiable coming from the low point. Now the question is, can they create a trend here? That's what Zoom has always had a difficult time doing, is creating a trend when it gets these upward movements in price. You see these real good upward movements in price, but you don't see good pattern development in those good upward movements in price. You just see volatility. So the question that I have for Zoom moving forward is, can you create a consistent pattern? And if you do, I have some interest.
Yeah, absolutely. Absolutely. Who else do you got for us today, Matt?
Yeah, we got a couple other stocks in the news here today. We got Snowflake reporting earnings. They're a little bit of a, disruptive innovation company in the financial space, and they've had a rough go of it in the last 6 months or so. The last couple earnings reports have been sold very aggressively. From the top point, it got sold. From the bottom point, it got sold. And now you're getting sold here today as well, as Snowflake just doesn't really produce a good enough report from a raw numbers perspective to get people excited here. EPS came in line. Revenue was also slight beat, but in line. 28% year over year growth, pretty decent though. From a guidance perspective, they did slightly increase that. From a guidance perspective, they went from 3.3 billion in terms of revenue expectation up to 3.3 billion on the revenue, but EPS was not increased. And that's where you really get the love. Mark, I would assume if yesterday, if you were going to tell me that Snowflake was going to have a slight beat against expectation on the EPS, a slight beat on the revenue, and a slight increase on the revenue side, I would say up a nice little upward movement in price. Maybe not like Zoom, but I think you would have got an upward movement in price. But this is the first time in a week where it was not a good day to report earnings. You had a little bit more consistent price action on these earnings reports than you have had in the last week. A little bit more of a normal reaction in my estimation.
Maybe a little bit of the froth of the general rally kind of balancing out, so to speak.
Yeah,
Right?
you got back up into that all-time high. You officially accomplished that V-shaped recovery, and at this point now you got to see something else, and that something else absolutely is PAL tomorrow, and not necessarily Snowflake's earnings today. But a tough look out of Snowflake, as they did have, I would describe Snowflake's as a decent earnings report, but just has a little bit of tough time getting anything going here. And technically, you just got to respect the technical side of the equation, because that's the market telling you the truth of the actual earnings report. So you got to be a little bit concerned. And then on the CSIQ front, Tackle 25 CSIQ, good little cash flow stock here. Keep on cash flowing is the name of the game when it comes to CSIQ, because they just did not produce a good enough report to get into a bullish conversation here. From a trending perspective, they came out with the miss against EPS, pretty sizable miss. Expectation was 13 cents. They came in at 2 cents. Revenue came in 100% in line with the expectation, but we saw a 30% decrease in revenue year over year. They also decreased revenue guidance for 2024 as well. Tough look and tough support test. If CSIQ is your thing, I would continue to cash flow on it. But from a growth perspective, there's just not a lot of growth in these numbers.
Yeah, more red than green in the on my screen in the world of commodities. Oil up a little bit. I like that bottoming chances here, Matt. I do on oil. Everything else just kind of pulling back, setting up on which is all obviously going to be a big day tomorrow for not just stocks, but for markets themselves.
Oh, markets, currencies, commodities, equity, bonds. Tomorrow's an all at Jackson Hole, and the speech at Jackson Hole, especially when the Fed is going into monetary policy changes. Those speeches are just they take on an they take on a very large role in the market. And so it's going to be the entire conversation tomorrow. And obviously, it's going to be a very, very important one in that as well. When you are looking at the commodities and the currency situations going into tomorrow, let's take a quick look at the dollar specifically here. Dollar showing a little bit of upward movement in price here today, but you are very overextended and at some very important support levels. And so technically here, you would expect a little bit of development either through a bearish retracement coming up into that 9 EMA, very similar to what we've seen on that first drop of the 104 level. That's probably the base case here, a little bit of a pullback type scenario. You could also form a little bit of a low base. So you're looking at a secondary pattern starting to form in the dollar index itself. And when that occurs, you're going to see a little bit of downward movement in price in the commodities themselves typically. And that's what we're seeing in gold here, down 33 points on the day. But I wouldn't exactly say the end of the trend here on gold. You're having a 9 EMA test. It's a very similar candle to the one we're seeing on the dollar here. So I wouldn't exactly say have a negative opinion of gold, given the fact that it's behaving very, very, very traditional against what the dollar is doing here today. Silver shows a little bit of downward movement in price. Quite frankly, I think a little bit more downward movement in price would be really, really good. I talked about yesterday in the tackle today, two numbers on silver I think we should track. 30 on the top side, 28 on the downside. Both of those could attract a little bit of pattern development. On the copper side of the equation, still trying to dial in that 4-2 handle. And in my estimation, the longer it takes to dial in 4-2, the more time it's going to take.
Yeah, you nailed this a month ago, Matt. You said 4-2, watch for development, and that's what I've been doing. I mean, like, all right, I'm going to follow Matt's lead here.
And that's what we're going to continue to talk about because that's the number. And so until the technicals change, we're just going to anchor against that. And the simple reality, I did a reversal webinar in tackle trading for the pro members in the coaches show over the last few weeks, Mark, and really got us into the frame of mind of tracking these types of reversals because and one of the things I talked about extensively is the amount of time it takes in reversals is really important because of these longer duration moving averages on copper, such as the 50 period moving average at 428 when you got a trigger at 4.2. If the 50 period moving average, it would take another good week and a half, in development here. But if that occurred, all of a sudden you got a beautiful breakout against 4.2 in the 50 period. So I 4.2 is the number. 4.2 is the number when you're looking at, copper stocks out there in the market. That's kind of what we're anchoring against. And so we're still looking at that number right now.
All
Now,
right, absolutely.
you mentioned one last point here. Didn't look at the crude oil chart. You love these bottoming formations.
I love these bottoming formations from a cash flow perspective. I
You
do.
absolutely do, and you've nailed a few of them.
I've nailed a few of these to the penny. This one has a feel to that right now.
Yeah, and what I would say from the directional side, because I have no doubt about your cash flow ability to take advantage of overextended short term movements in crude oil. What I would say from a directional perspective, it's too much chop, lack of trend analysis, lack of pattern development. It's just too much volatility on the directional side right now.
It is the difference in trading from cash flow to direction, right? Charts, beauty of the eye of the beholder. These are the kind of conversations we have in the Traders Lounge every day. These are the kind of conversations we have at Tackle Trading, where we have a diverse group of traders, all kinds of different styles, investors, day traders, such. It's an amazing community. It's very helpful. Give it a try. Sign up for that 15-day free trial. Go to tackletrading.com to sign up.